Hello, this is Craig Larson with Larson Financial Advisors for the market message on January 19th, 2015. Happy New Year and thanks for tuning in. So last year, on my last video, which was about 4 weeks ago, I did mention that I expected more volatility and some potentially big trend changes coming in 2015. And wow, we have not been let down so far. It's been kind of a crazy ride for the last couple of weeks. The good news is that U.S. stocks continue to be the #1 ranked trend category. So no big shifts there. However, we've seen a lot more volatility lately. Stocks are down a little bit year to date. Now bonds, speaking of treasury bonds, are way up. And the 10-year yield on the treasury bond has fallen from 2.2% down to 1.8% in a couple of weeks. That's a pretty big move in bonds. In addition, we're seeing the spread between junk bond yields and treasury bonds yield continuing to widen, and that is a red flag. So we want to wave the caution flag out there on things. In addition, the biggest news of the year was last week in currency markets, as all of a sudden, without any warning at all, the Swiss National Bank decided to decouple the Swiss franc from the euro, sending the franc up 16% in one single day. That huge move was enough to wipe out a couple of hedge funds and currency trading firms that were heavily leveraged against the franc. So I think my theme for 2015 is now expect the unexpected, because no fundamental analyst, no chart analyst at all saw that coming. It was a big move out of nowhere. Now moving on to oil. Oil, of course, as you probably know, has dropped close to 60% in the last 6 months, and it is in no man's land. So the question is, when does this become a good value? Well, when something has fallen 60% in 6 months, we're in a new normal there. And so even though oil's starting to firm up a little bit right here in the mid to high 40s, it's really a speculator's game at this point. Long-term investors should still be very cautious. Now, most of the people that I work with are longer term in focus, and so we look at a trend score. I call it my fund score system, and it's a math algorithm that tries to figure out what the trend strength is on something. The low score is 0, the high score is 6, and we like things that are 3 or higher, and if something is 4 or 5, of course, it's a really, really strong trend. It's generally safer to own those things. Well, the two oil funds that I track, which is the Deutsche Bank DBO oil ETF and then BNO, which is the Brent oil ETF, are both scoring 0.01 right now. So really no trend strength at all. And oil could just as well be $70 a barrel or $20 a barrel 6 months from now. So be very cautious with these fast-moving speculative things like that. Now, on the other hand, gold, which we've been talking about for a couple of years, which has had a horrible score and really bad momentum, looks like it might have set a bottom over the last few weeks. The score is rising. It's 2.93 now. Momentum's starting to improve. So that'll be something to watch in 2015 as maybe one of the big trend shifts. Finally, I wanted to talk a little bit about financial planning. And if you haven't gotten a plan to handle the next crisis or trend shift, now would be an excellent time to do it. Back in October 2008, there was a famous TV stock picker celebrity who at that time said to get 5 years worth of cash reserves raised. And unfortunately, I thought that was horrible advice because the damage had already been done. The markets had already crashed. Now you have an opportunity to be ready for the next one before things crash, in case they do this year or next. So make sure that you've got adequate emergency funds in the bank. If you're fully invested, maybe screen through the portfolio, sell some laggards, raise a little cash so that you've also got money for opportunities which inevitably come up during these volatile times. Now, if you're close to retirement and you're fully invested in stocks or bonds or commodities, we call that red money here. It's at-risk money. Maybe it goes up 30% in a year, maybe it goes down 30% in a year. There's risk there. So if you're very close to retirement, consider putting some of your money in green money type of investments, guaranteed CDs or fixed annuities of some kind, just in case. So if you want any help with that or have questions, please email or call, and I'd be glad to help. In the meantime, have a great week, and thanks for watching.